This is the Daily Market Comment by Harlambos Bisuros. I'm Maria Bashirtis. Thanks for joining us at XM.com. The US dollar kept sliding yesterday on firmer views that the Fed will slow the pace of its interest rate hiking cycle. Following Tuesday's disappointing data, market participants may have become more assertive with regards to the likelihood of a less aggressive Fed due to the Bank of Canada announcing a smaller than expected 50 basis point rate hike yesterday, and adding that it is getting closer to ending this historic tightening crusade due to projections that the economy could stall over the next few quarters. The loonie tumbled initially against the greenback, but it was quick to recover, as the Bank of Canada's decision may have been interpreted as setting the tone for other major central banks, including the Fed. The dollar's retreat helped euro-dollar climb back above parity for the first time since September 13th, with euro traders locking their gaze on the ECB decision today. A 75 basis point hike is fully priced in, and thus, if this is the case, any market reaction is likely to come from the accompanying statement and/or President Lagarde's press conference. With the euro's weakness hurting the eurozone trade balance and several policymakers expressing discontent towards that, the language is unlikely to lean towards the dovish side. Rather, officials may attempt to defend the common currency. This, combined with a sliding US dollar due to increasing hopes of a less aggressive Fed, may allow euro-dollar to extend its latest recovery for a while longer. During the Asian session Friday, the central bank torch will be passed to the Bank of Japan. Following the second round of intervention by Japanese authorities on Friday and Monday, investors are likely scratching their heads as to whether the bank could change its mind around monetary policy. Expectations are for no change at this gathering, but traders may look for clues and hints about officials' future course of action. European shares extended their recovery yesterday, perhaps due to speculation that central banks around the world may start slowing the pace of their future rate increases. However, Wall Street did not cheer the narrative this time, as hopes about a monetary policy pivot were likely overshadowed by disappointing earnings results from Microsoft and Alphabet after Tuesday's closing bell. Wall Street is expected to open higher today, despite results from Facebook parent Meta Platforms and Samsung Electronics in after-hours trading yesterday that spurred more worries of a downturn. Nonetheless, although the outlook for the stock market remains blurry, now may not be the time for a new lower low, at least not before next week's FOMC gathering. This is today's Daily Market Comment. Thanks for joining us at XM.com.